This video is going to show you a template that will describe the basic structure of the income tax from a farm and ranch operation. Certainly income tax is much more complicated than this, but for you as a freshman student and this being an introductory course, at least this will show you the basic flow. It's kind of like a flow chart. It'll show you kind of how farm revenue, farm expenses are used to estimate how much income tax would be due. Please remember there's a lot more to it than what I'm showing you here, but at least this will give you an introduction. You may want to review this little video a couple of times because you will have some questions now that'll be on the exam that will ask you to complete a chart very similar to this. Also, very, very important, when I was showing you this in class, I forgot one step. Simply too old to remember, but you got to, I'll point it out here during the course of the video, but be very, very careful to understand. Let's just suppose that we had a farm with gross farm revenue of 255,000 and we had farm expenses of 145,000. When we say gross revenue, we simply mean the sales from the farm. If you take revenue minus expenses, you get something called net farm income from operations, and we abbreviate it NFIFO. Please remember that because you will use that in other ag business courses. Okay, so you take the 255, subtract 145, you get 110,000 of net farm income from operations. Once you get net farm income from operations, and that would actually be shown on Schedule F of a tax form. Don't forget that. I want you to know Schedule F. Okay? Once you get that net farm income from operations, you must calculate your Social Security and your Medicare for self-employed persons on that 110,000. Now here's what I forgot to show you in class, just an oversight on my part. Before you actually calculate the Social Security and Medicare, the federal government allows you to multiply that number by 0.9235. Okay? That's just a number that the Congress of the United States has decided upon and simply passed a law. So you get to reduce this number a little before you actually calculate the tax. So let me show you what I've done in this template. In this template, I've gone out here and put the net farm income from operations right here. And then in this line, this second line, I've actually multiplied it by the 0.9235. So you can see, if you look at the cell, you can see that formula is simply the cell right before it multiplied by 0.9235. Now this cell here we want to call the net farm income from operations that's subject to SE tax. Again, now when you take exam 2, this is going to be a very specific term, so pay attention to it and realize that if you see this term right here, that means the net farm income from operations has already been multiplied by the 0.9235. Okay, now the SE tax here is simply like I showed you in class. If it's less than 18,500, you would multiply by 15.3%, okay? Because that's Social Security and Medicare. Remember that Social Security is 12.4% and Medicare is 2.9% up to 118,500 where Social Security goes away. So if you will look at this the formula that I've put here, you will notice that what I've done is this little formula right here shows you that it shows you the formula, and it shows you that if F4, which is this net farm income from operations subject to SE tax, if that number is less than 118.5, you'd multiply it by 0.153. In other words, the Social Security and the Medicare. However, if this number is above 118,500, you would multiply the 118,500 by 12.4%, and then you would multiply the entire amount by 2.9. Now, we covered that in class, so make sure you understand. You pay Social Security up to 118.5, but you pay Medicare on everything. So this little template does that arithmetic for you, and that would be the amount of self-employment tax. Now we're going to use SE for self-employment, so that's the self-employment tax. Okay, now let's go back to the income tax portion. So this amount, this self-employment tax, you got to pay that. That's due. Now we got to go calculate how much income tax is due. So according to current law, what you can do is you can then begin to create a set of deductions. Okay, not credits. Now remember the difference between a credit and a deduction. You can deduct 1/2 of your self-employment tax. So this cell right here simply takes that self-employment tax and multiplies it by half. That becomes a deduction. Personal exemptions here are $4,000 per family member. So in this case, if you had a husband, wife, 2 children, that's 4 family members times $4,000. You get a $16,000 deduction. Okay? The standard deduction for a married couple filing jointly is $12,600. Now, in class, I described to you what the standard deduction actually is representing. And it's important that you go back and look over that. But it's representing medical expenses, moving expenses, donations to church and charity, mortgage interest on your home, state taxes, and some other things like that that we talked about in class. But you do get 12.6 automatic. Now, if you can add up more than 12.6, you can actually use a bigger number here. Every person has the right to take out what's called a traditional individual retirement account. Right now, by law, it's $5,500. You can or cannot take that out. It's up to you, but you have to put it into an account that where you can't get to that account until you're 59 years old, 59 and a half. But you can deduct that if you choose to do that. It's simply a choice. You don't have to. Okay. Now this 41,871 is a sum of these four deductions right here. Okay? So those four deductions sum to 41,871. Now you subtract the 41,871 from the net farm income from operations, okay? And that gives you something called net taxable income. Now what that means is that's how much income you have to pay income tax on. So what you're going to do is you're going to take that number and simply go to the tax bracket and find where it's located. So it's going to be right here in tax bracket number 2. You're going to have a marginal tax rate of 15%. Okay? And then this row right here is simply going to calculate the amount of tax based upon which tax bracket you're in. Okay, now one of the nice things about using this template is that you can kind of play games with where what the different dollars amounts are, and you can change them. For example, what if I made this 300,000, and what if I made farm expenses 125,000? That's not very realistic, but you'll notice it immediately changes. Okay? And you can see at $175,000 worth of net farm income from operations, you would owe $19,000 in self-employment tax. You would owe $24,000 in income tax. This number right here is simply a sum of the two. This is what you actually owe the federal government in terms of income tax. Once again, I want to stress that taxes are nowhere near this simple. I mean, the United States tax code is thousands of pages long. But what this does, it does show you a flow chart of kind of how farm taxes would work. If you had a couple that simply was running a farm, no, in this case, no other income, just a farm, that you could put gross revenue, farm expenses, you get something called net farm income from operations, and then it would calculate the self-employment tax. Then these deductions right here can be subtracted from the income before you actually calculate your income tax. One of the things I want you to realize is that these deductions here, when you sum those deductions, like these four summed together is 43,000. You know, if your net farm income back up here was let's say around 40,000 for some reason, then obviously these deductions would make this number a negative and you wouldn't owe any income tax, but you still would owe uh, self-employment tax. Let me illustrate that to you. Of course, If the income changes, it's going to change your half of your social self-employment. But let me take this down here and show you what I mean by that. Let's say you had gross farm expenses of 90,000. Okay, and let's suppose your gross farm expenses here were 65,000. Okay, now you see your net farm income is 25,000. You still owe $3,532 of Social Security and Medicare. But when you start taking these deductions and get the total deductions, they actually run your taxable income to a negative number, and you would owe any income tax. There's a lot of people who get confused. They think, oh boy, I had a loss on my farm or something, and oh, well, not, in this case, not on the farm, but I had a negative number after I took all my deductions, so I don't owe any tax. Well, you do. You don't owe any income tax, but you would owe self-employment tax. One other thing I want to show you real quick, and I know this one's running a little long, but let me go back and put the numbers in that I had a while ago. Let me show you the impact of these deductions. The tax here is 24,389, and I'm going to just go over here and put 24,389. I'm just going to type it in. Watch what had happened if you took $5,500 and put it into an IRA. In other words, you put it into a bank in a savings account. But now remember, you can't go get that out. But what if you just chose not to do that? Okay, so let's put a zero right there. Look what happens. The income tax actually goes to 25,764. Okay? And if you simply do a subtraction of those two numbers, you'll see that putting that $5,500 in that IRA actually saved you $1,075 in income tax. So I encourage you as you get out and go working in a farm business somewhere to remember about that traditional IRA because it is a way to save tax dollars. In fact, significant amount of tax dollars. But again, you have to put that money into some kind of you have to put that into an account in which you actually can't take it out for a while without a penalty.